Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. Today is 2026, June 12th, and markets are serving us the full buffet. A new Fed communication era, a giant SpaceX IPO, India inflation, global infrastructure money, and one natural gas deal that looked at commitment and said, absolutely not.
So basically, the market woke up, drank 3 espressos, checked oil prices, looked at rockets, and whispered, "Diversify me, daddy." I promise that is not investment advice. It is just the sound of my retirement account asking for adult supervision.
Story 1. CNBC reports Kevin Warsh will hold his first Federal Reserve meeting, giving markets their first public look at how he communicates as Fed chair. That matters because in modern finance, the Fed does not just move interest rates, it moves expectations. And expectations move bond yields, mortgage rates, stock valuations, and your humble credit card APR that has been training for the Olympics.
I hate that the most powerful person in markets can change my net worth with a comma. Like if he says inflation is elevated, stocks panic. If he says inflation is somewhat elevated, traders start hugging each other on the floor.
Simple version. Imagine the economy is a car, and interest rates are the brake pedal. Investors are not only watching whether Warsh taps the brake, they are listening for whether he sounds like he is wearing racing gloves. For normal people, the signal affects borrowing costs, savings yields, and whether growth stocks get valued like luxury condos or like slightly used office furniture.
Speaking of luxury condos in orbit, story 2 is SpaceX. SCMP frames the IPO as part of Elon Musk potentially securing first trillionaire status, while other reports in today's feed point to a record-sized stock market launch and a reported $75 billion raise. I know we are supposed to be calm, but a rocket company listing at that scale is basically Wall Street putting a launch pad in the lobby.
Here is where I become the designated seatbelt. A huge IPO can show deep investor appetite for hard tech, satellites, defense-adjacent infrastructure, and AI-era connectivity. But IPO excitement is not the same as margin of safety. Paying for the future is fine. Paying for 3 futures and a commemorative hoodie is how portfolios get roasted.
I disagree a little. If a company changes launch costs, satellite internet, and strategic infrastructure, maybe the premium is the point. Sometimes the market is not buying current earnings, it is buying optionality, which is finance language for we do not know what this becomes, but we would like a front row seat, and possibly snacks.
Fair pushback, and I will reverse half a step. For long-term investors, transformative companies can deserve premium valuations. The actionable point is position sizing. If you buy hype, buy it like hot sauce, not soup. A small allocation can capture upside. A giant allocation can turn one delayed launch into your personal weather event.
Story 3. India's inflation accelerated to 3.93% in May, according to Bloomberg, but stayed below the Reserve Bank of India's 4% target. The wrinkle is fuel costs from global energy disruptions, plus other feed data pointing to food inflation pressure. So the headline says under control, but the grocery receipt is still clearing its throat.
Exactly. Inflation below target gives the RBI breathing room, but fuel and food are the household pain channels. For investors, India remains a growth story. But rate expectations, currency moves, and consumer spending all depend on whether inflation stays polite or starts acting like it owns the apartment.
Normal person translation. If oil jumps, it does not just hit drivers. It hits transport, food distribution, company margins, and eventually the price of the thing you swear used to cost less. Inflation is like glitter at a craft party. Once it spreads, good luck finding the original source.
Story 4. Bloomberg says Kenya picked a Chinese firm for a $2.9 billion upgrade of its biggest airport after an earlier Adani-linked concession was canceled. This is not just construction news. Airports are cash flow machines tied to trade, tourism, debt financing, and geopolitical influence.
Airports are basically malls with runways and emotional baggage. But the investing lesson is serious. Infrastructure can look boring until you realize everyone pays to use the boring thing. The risk is political, contractual, and currency-related, which is why these deals can go from champagne to compliance paperwork fast.
And Story 5 proves your paperwork point. ENN Natural Gas terminated a restructuring plan that included a nearly $12 billion buyout offer for ENN Energy Holdings and a second listing in Hong Kong. Deal collapse matters because investors often price in the takeover premium before the ink is dry, then act shocked when the ink was apparently written in disappearing marker.
So today's theme is do not confuse announced with completed. A Fed tone is not a rate cut. An IPO is not guaranteed riches. Inflation below target is not zero pain. And a buyout plan is not a wedding vow. Finance is romantic like that, if romance came with footnotes and regulatory approvals.
Quick recap. Watch Warsh's first Fed communication for rate clues. Treat SpaceX as a major liquidity and valuation test. Monitor India's fuel and food inflation. And remember that global infrastructure and energy deals carry execution risk. For your own finances, keep an emergency fund, diversify across assets and regions, and avoid turning headlines into impulse buys.
If this helped you understand the market without needing a spreadsheet therapist, like, subscribe, and tell us in the comments, are you more worried about the Fed, inflation, or IPO hype? I am personally worried about all three, plus my grocery bill, which appears to be seeking venture capital.